All right. Good morning, everybody. So taking a look at what's going on around the world, we got a mixed bag here. Japan is leading, but not by very much. And the one doing the worst is Hong Kong. So, that whole narrative of stimulus is kind of burnt up. There's just nothing there. But in the middle of that, not a whole lot one way or the other. You know, if you think about the cycle and the way it starts, Australia and then Asia and then Europe and then us, right? That's kind of the way it goes when markets are opening around the world and, you know, another day around the sun. All the commodities are up, which kind of fits in with this idea that maybe inflation isn't done yet. We're going to be getting inflation numbers today, the UMich. That might have a little bit of impact on how the market behaves today. It'd be interesting to see, what we're going to get. We also got PPI. As you can see, it is potentially volatility inducing. So Michigan Consumer Sentiment Index, inflation expectations, and producer price index. So a pretty full house today, all things considered. We've got a lot going on. There's been some talk about the stick save, right? The save a hoe or the plunge protection team that's going to come in and flip this market over and run it back to the upside. It's not exactly a surprise, right? It's why we can't spend all of our time just staring at the charts trying to determine where we think the S&P or the NASDAQ is going to go next, because it's not always about what's on the chart, right? It's about them coming in with the PPT and turning things around. One of the things that I keep coming back to is US dollar Japan and their new, I don't know, allowance in that yield control, where now they're willing to let it wobble up to a point, and yet they still came in and defended it, at 0.6 and 0.7. So, we're back into that same area that we were last year when they defended things. And I don't think they're going to let it ride. So if they were to come in and defend this like they did last year, that brought us up off of the October lows. If you can remember back, the S&P in October, that was the lows of 2022, and we flipped over from that and ran, and we haven't been back. So whether it's the narrative that they came in and saved something, or it'll be, some other data point, it's not like they make it obvious, right? It's going to fit into whatever narrative is going on. It still implies that the S&P and the NASDAQ and the market in general is headed back up again, and that this is nothing more than a pullback, a needed pullback during the most dullest part of the trading year. And that, when we come out of summer onto the other side of this thing, that it's back up to the highs and then some. So just kind of keep that in mind, right? We can point to all the things on the chart that tell us we're overbought, we're oversold, that we're overextended, and all these different reasons why we think it's going to go down. But at the end of the day, if they come in and play save a hoe, it's going to go up. And it'll fit whatever narrative they attach to it. So we do have US Japan here on a weekly chart. We are coming back up into that 145 pivot point. That is an area of concern if we do get through it. As we can see back here in October when we did get through it, and they came in and had a global coordinated effort to change things. The Swiss, the US, it was an effort, right? Team lift. So if we get above this 145 again, we'll see if they come in and do it again. Do it. You can do it. Looking at US dollar China, we have the same shape and the same situation, but we're not quite at those highs yet, right? So this has a little more room to run or a little more room to move before it starts to get into that critical area. And again, when we look left there, whether you wanting to talk about, supply and demand and use all that kind of language, I just say that's unfinished business right here. And that when we get back up there, people are going to try to get some business finished. Are they done yet? I don't think so. No. Come on, did I break it? There it goes. So the 2-year hit 5% and pulled back. In the last month, we've been trying to get this to come down, right? We don't want this to go up, right? We want it to come down. So we've been trying to get it to come down. It's still holding that 10. And we've got all the major moving averages fanned out nicely. So this week we tried to break that 10 and we brought it right back in again. 50% of last week's candle is kind of the line in the sand if we're going to maintain this bearish posture and see the 2-year get down below that 4.8% and stick it on the week. On the 10-year, we're past the 50% point of the previous week, although we did manage to tamp it back down from that 4.1 last week. We're now challenging it again this week, and it's not like some reactionary trigger, right? When you grab a hot pan, you immediately let go of that pan. This is a little different. It can get up there and sizzle a little bit, right? What do they say about the frog in a pot of slow boiling water? You just keep turning the heat up a little at a time and roast before he even figures out that he's roasting. Well, this is kind of the same situation. When we get above that 4.1, it might not immediately trigger a reaction throughout the marketplace. But if we stay above that 4.1, it's going to continue to do its damage. And yesterday we had those 30-year bonds, which tied in with the US dollars or with BOJ and its 30-year over there the other day. And, at 1 o'clock yesterday, it wasn't that bad, huh? The world didn't end. We didn't see too much violence within the charts. So, yeah, it was kind of like falling down a mountain, right? Or falling out of a tree and hitting branches all the way down. I need a better analogy, huh? It looked like we were starting to turn the corner with US dollar Mexico, but no. I guess we're just going to continue to keep our eye on that 50% though, because if we do, manage to get back above that 50%, then it's still game on. We can then try to aim for that 10 and work through the 20, but one step at a time, right? It looked good back here too, and that didn't work out. So patience. So 8:30, 10 o'clock, 1 o'clock, and the Michigan data. 10 o'clock. So we got it all. By 1, you should be good with your 0-day trades. In fact, by lunch, you should be good with your 0-day trades, because that rig count, I mean, I used to work on those rigs, and it's not going to change much unless something drastic or extreme is happening, and that isn't happening. So that number shouldn't change. Okay, we made contact with the 10-week yesterday. Now, like we've discussed earlier, you know, just getting there doesn't necessarily mean we're going to immediately run right back up again. We can see previously where we cut through it and came back above, multiple instances, right? More than once in this run. One of the things that matters is the degree of the slope, right? If we were talking about coming down and tagging a 10-period moving average, but we were sideways, it wouldn't have any respect to it at all, right? We wouldn't care. It still matters in the grand scheme of things where we're located within these moving averages, but not because they provide any support or resistance, right? That's not how things work. It's more about just where are we located? Where are people setting their alerts? Where are they setting their stops? Where are they paying attention? And that is a level that gets people's attention. It causes them to come in and make decisions about trades that they were in that was the line in the sand. So it's not support and resistance, right? It's just kind of grasping that from its bigger picture. We don't lean on these like we can trust them to hold anything up. We got there. We reacted to it yesterday. We need to stay above it. And so far, it's not looking too good. So we'll keep our eye on it, see if we're going to come and get that stick save that we were just talking about. And remember, it's very likely not going to come from any of the charts that you're looking at, right? It's going to come from PPT style, changing a narrative. Very tight draw today. We didn't even really get much of a move through the kill zone. This is a market waiting on something. We can see their fingerprints, right? Or the lack of, sitting in 85, just like yesterday, sitting at around 89. And we can see their concern and their fears because they have the market maker move triggered again this morning. Remember how that gets activated. They trade options in the front end to begin hedging, and that shows their hand. That shows they're concerned, they're hedging, they're sitting out preparing for a storm, right? Or what does Kaufman say? Get under the desk and start rocking back and forth, huddling, something like that. It's going to get bad. That's what they're preparing for here, right? Preparing for the storm. But just like with yesterday, doesn't mean that there's going to be a storm. I mean, that was a big old nothing, right? We didn't get anything. We got a whole lot of nothing. So today could be the same thing. The idea is when you don't know, hedge, right? I mean, that's what insurance is for. 10-day, 30-minute volume profile. If we was to look at it as a classic B, then, you know, that would be pretty forgiving. We do have a very large shallow zone that we're likely to move through quickly. So if we can get back above that 45.50, then we're very likely going to go to 46 without much trouble. Getting up to that level is a completely different discussion. In fact, just getting back up into that 45, 40, 45, 50 area would very likely bring that point of control down to us. Right now, it's still sitting at 4,600 area, and it doesn't belong there anymore, right? We're going to bring it down. We're really close. It looks like this 45.27 may get that point of control if we can get up into that area today. If it's not that, and we get, say, this cog line at 45.11, that could be our new point of control by tomorrow. We just need a little bit of lift. Speaking of lift, it does, you know, say quite a bit about these lows. Notice that it's lower lows each time. It's just a little bit lower and a little bit lower, and lower highs and lower highs, and then, oh, wait, what? Higher low. Now, if we're using OCR style analysis, that matters, right? And in fact, that higher low, or excuse me, higher high and a lower low is an outsized bar. It's an outside bar, right? Engulfing bar. Say it as you will. Okay, we took out the VPOC yesterday, but looking at that should have been done yesterday, right? Nah, never mind. Let's get this one off and move it to where it belongs. Right there. We'll still end up taking it off, but that's where it was when we came down. No, hold on. We hit that sucker yesterday, whichever one we had on there, because I put it in the notes. Yeah, so when it was back here and we came down into that the other day, it should have been taken off. But that reaction yesterday, there was a first touch bounce. We got down into that, hit it, bounced up, and then we drove through it strong with conviction. But it should have been took off. What were we doing yesterday? We didn't even get into that. That's just sad. So the VPOC today, there's no reason to have one. You can see how we've crossed through it already multiple times. So we'll take that off. And this one up here will also be taking off. So that 45.43 that's been there since last Friday got hit yesterday. So it's not an argument that it was some kind of support or resistance, right? We didn't get up there and hit that and it rejected us like a resistance area. That's not how this works, right? Right. So no point of control to carry forward today, and we've cleaned up the point of controls that we didn't deal with yesterday. We still got one underneath us at 44.55, and we still have a couple overhead, 4,600 and 46.22. So we're in the middle. $10-day, 30-minute volume profile, the edge of the expected move. That's not ES. Hold up. The edge of the expected move is 44.29, and we're nowhere near it, right? We've got a long ways to go before we start getting near that expected move. And in fact, for most of the week, we haven't done anything. If we were just to use the LinReg from Monday to this morning, I think that's pretty obvious. And those wicks are telling that they're coming in and buying it at those lows, but we are continuing to see those lower lows. And then, of course, as I pointed out on the profile page, we did get an outside bar. And I don't think I'm the only one who's expecting them to come in and stick save this market, right? Just pull it up out of the dirt. It wouldn't surprise me to see one more drop down first and then come in and play save a hoe, right? So probably not today. Think more about like a Monday gap down and then a flip rally back up, stick save that way, right? That's more in line, but it doesn't have to be, right? We can see back here where we had that little bit of a gentle sell-off and then just an amazing continuation. So, it doesn't have to get bad first before they come in and do any of that. But, say back in March, a nice deep dive and then the start of the recovery, turning it back around. The thing is, we very likely won't know the narrative they're going to use. They're going to do it, and then they're going to attach something to it, right? Like, oh, well, it was this. They don't know. We don't know. We just got the idea that it's very likely going to happen. Whatever excuse they attach to it. Don't you love it? You spend all that time learning how to perform technical analysis and read the charts and, squint at the Ouija board just to wait for them to come in and play save a hoe and tip the market in one direction or another. Shenanigans, right? All right, so really nothing's doing good this morning. We just have ones that are doing bad. The indexes are showing down the most. So I'd say that label is wrong because that's not the indexes. We've got JD, PDD, Neo, Baba, Baidu. So this is the China ADRs. What happens with this little label here is I have to build the label based on last price. And so what I do is give it a range, say between 1500 and 1600, and it'll have the word China ADR or index. So it's an easy fix. It was just a little misleading. It's not the indexes, it's the China ADRs. They're down the most. That's a significant gap down after that nothing of a day yesterday. Taking it out to the daily and the weekly, or at least just looking at it on the weekly, we're at 1477 in this index, which really doesn't equate to any one name. But it is near the bottom of the week. So we're still inside the week, but not by much. So if we go in and take a look at that individually, say in BABA, we're below that $100 level again, which we closed underneath it yesterday. So it's not too much of a surprise. And we're close to this 96.26 level, right? So we're inside day breakout. It needs to hold. What you could see maybe a little bit this morning is a small rally up, could get tangled up with the open and then continue that move to the downside. And we're just trying to close this gap, right? Trying to get down to the 20 period moving average, which is 95.82. And that would get us closer to this, because that's where the gap actually is, right? That 95. That's how we close the gap. Some analysts will say as soon as we get back to that candle, the gap is closed. And then there's people like me that say, nope. If we closed there and then we gapped up, the gap isn't closed until we get back to that. It makes sense to me. So it's not just BABA. Baidu as well, although I don't like the options in Baidu right now. There's just they're junk. There's no liquidity. But then it's also JD, PDD, and very likely we're going to see those EV names too, like Neo, Lee, Ride, XPEV, Rivian. Rivian, not so much. It's already turning back and coming in again. It's looking pretty good. I bought some puts for that earnings announcement, and so far it was a good decision. I don't normally do that. Normally, if it's earnings, I just stand aside and let it report. But it seemed like this was a part of the whole China stimulus thing. So it seemed that their stock price didn't match the valuations. So like, why not? It's a cheap earnings trade. If I was wrong, I would have just defended it, but I didn't need to. It makes sense. The EV names are the next one on the list for being down the worst. It has a lot of those same names in it, right? Lee, Neo, Nikola, Rivian, Tesla, XPEV. They're all down this morning. They're trying to turn around a little bit, but we're inside day breakout and right now bumping our head on the bottom. So it's It's got to get back inside that at the very least, right? A lot of work to do from that side of things. I don't think it's done yet. And bringing it out onto the daily, we got the 50 period moving average down there, which is what it's struggling with this morning. Do them both. Why not? So the 50 SMA we hit yesterday, and we're below it now. The 50 EMA, we're not yet having made contact. So, a little bit more to the downside. Either way, getting anywhere near that 50 like that is weak. And it's also a prime setup to change the narrative. We got semiconductors here. AMD, AVGO, Intel, MU, NVIDIA, Taiwan Semiconductors. So we got a smattering, right? Is that the word? We got a buffet of names here. Let's try to take that SMH off, and maybe we'll get a little better of a. Sometimes the thinkorswim's a little goofy like that. An ETF will hold it back from showing us any real good pre-market data. So not much in the way of the change there. Pot stocks are also down this morning, and notice there's nothing on the upside to even point to. Nothing. I mean, refiners are barely on there at all, and otherwise we just got nothing. Take a look at Bitcoin this morning. It is trying to get back up off of those lows, which held after getting tested multiple times this morning. We got a really nice setup here. It looks like Bitcoin could give it a go, right? If it can get above that 29.5, we could see maybe getting back to 30. And if this does start to lift off, it would be Riot, Mara, Coin, Hut, Hive, all of those would have a nice play to the upside as well, right? Otherwise, this rejects, we're likely going to see that reject in all those proxies. So it's worth taking a look at the very least. If you're a little more shy about your entry, focus on 50% of yesterday. Use that as your line in the sand. That's 29.6. Right? Get above that. Could look to add in, perhaps. It is a little bit of a TRB, but it's an ugly one, right? Just like that was a TRB, and look at the stick save on that one. Oh, yeah. So that's kind of what we're looking for. Another one of those days where we go from 29.3 to 30.2 in a day. So Hut, Hive, Mara, Coin, all of those, right? That'd be kind of the group that you want to focus on for that direction. Really, tech isn't down that much. It's semiconductors that are down a lot. So, every day has been this grind lower, right? And I kind of mentioned this a little bit yesterday about how it's not all supposed to go in a straight line, right? We need it to walk lower. Let's just get this stuff off the chart here. It's easier to see it in the SPX than in the ES. We need this to walk lower a little bit at a time. So, the gap down starts everything off. You get the sell off to the downside, the gap down, then the rally up. Because if it just sold off and sold off and sold off, they wouldn't have anybody trying to take the other side of the trade, right? So you get a little bit of a move up. You still close lower than the previous day's close. The next day, it looks really good. It sells off. You still close lower than the previous day's close, right? And then one outside, this is a new week going from Friday to Monday. It started good. It looked good. And then, of course, the sell-off, closing lower than the previous day, closing lower than the previous day. Down here yesterday, closing nearly equal. So it's a start, right? We got to normalize down here. We got to build that base, get that structure, and then start looking for the move to the upside. And the save-a-ho, right? The stick save, the group that's going to come in PPT style and turn this thing around. Since it is Friday, let's go ahead and talk about it real quick. Next week's level is already on the chart. Just keep in mind, it's not set in stone yet, right? It will lock into place at 4:15 this afternoon, but until then, it's dynamic, it's moving. The midline here, that gray line, is at our current price. So as price moves up and down today, not only is the gray line moving up and down, but so is the green line and so is the red line. It's moving up and down, but it's also widening out where the green line might go a little wider than that and the red goes that way, or vice versa. They start coming in, right? They're going to continue to shift and rock and roll and move until 4:15. They'll lock into place, and then that'll be the new weekly expected move. It's supposed to close inside the box 8 out of 10 weeks, right? Or 80% for the S&P. For any other name, it's 7 out of 10 weeks. So you should be able to count back over the last 10 weeks and see that it closed inside the box 7 out of 10 on all products that you look at. But even on the S&P, you know, you can expect more from the S&P, so it should be 8 out of 10. Got to hold it to a higher standard, right? We've had a lot of breaches in the last few weeks. So, you know, I was counting that up yesterday with somebody, and yeah, it starts to be a little concerning, right? It's a warning that things are going astray. We are still above that 10-week, but we're only a 0.5%, and the trend is still to the downside, right? I know this, or maybe the wave is a better word to use. It doesn't look much like a wave, right? But we are on that downward slope. That the current week we are in is lower than the previous week that we were in. And these 3 weeks in a row were still lower than that one, which was lower than that one. So we peaked out at about 5%, and we've been drifting closer to the 10 ever since. Not necessarily going down, right? And it was after the new contract. It was this slowdown in the market which allowed the 10-week to catch up with us. So one way or the other, it accomplishes its goal. We are underneath the 10-day 0.81%, so not quite 1%. And in fact, we're working back towards it, or we're trying to get back to it from the underside. And again, this is a bit of a wave, even though it's choppy and nasty, and it very likely you don't see it that well. But if we are on this cycle or wave, then it's expected that we come up at least really close to it, maybe even all the way back to zero, like we did back here and here. All right, so those China ADRs are getting hit pretty good, and it doesn't seem like it's turning around, slowing down, or stopping yet. just from that group alone, you got some pretty decent trades. Add in the semiconductors. I mean, NVIDIA doesn't look that bad this morning. It's at the lows, but I mean, that's all we could say is it's at the lows. 420. If we do try to rally today, there's so much work to do here. So much resistance, so much trash in the way. 432 is going to be a level of concern. It's going to be hard to get through that zone. But if we can, we'll target 443 and then we'll work on getting this gap close at 446. And believe it or not, it can do that in a day. Oh yeah. It's got a $15 expected move, and then it has a market maker move of an additional $5. So it can move $20 today, easy, no problem. We're at 420, so we could go to 440 without a doubt. And then we could just keep going from there, right? You get that much momentum, people coming in and start chasing it, hammering down on them options. We've also got a bigger, broader TRB from like way up here. It wouldn't make that one in a day, right? We're not crazy. All right, looking at Intel, yesterday was a great example of consolidation and just building up, winding up energy. So it did the work, nice tight range. Now it needs the follow through. We can start on this one with an inside day breakout because we're IX10 at this point. We get above 35.10, we got a nice shot up into these levels where we can close the gap, say 35.83, and at least 50% of that big bar, if not all the way up to the top of that bar. $36.43. Interesting how far it fell to the downside, that it stopped at that 200. Now we're just chopping about here. Nice big zone. I'd like to see it break at that 35 to the upside. And it would just be level by level, right? We get the gap close here. Then we get a break out of that bigger zone to get a gap close here, and then 50%, and then top of the zone. One by one by one. Could have swore I put that on there. Anyway. 21-day ADR is $1, and right now we have another 40 cents that we could add to that. So $1.40 from its current location, which this morning we're sitting at 34.50. So that'd get us to 35, 36. That would be right up at the top of that doji. Just need to get the push. Yeah, AMD, it doesn't have the same compression as Intel, but it's still in the same boat, same situation. And we got this kind of a broader wedge shape going on here. We are underneath the 10 and the 50, so that's, got to be resolved. We do have a TRB setting up with a nice base. We just got to get through that trash from yesterday. And look, make no mistake about it, that 113, when we got into that zone, they were happy to sell it. Happy to sell it. You gotta believe that there's a lot of unfinished business there. And if we try to get back up into 113, 114, that they're going to be still sitting there ready to sell more. So we need a break and a push through that level to just clean the board out of whatever is there, get it done, right? And then we can start working past it. It was a gap close push as well, right? This needed to be closed. It didn't get closed that day. And so yesterday it came up, it got the gap closed and down it went. Now we're looking for a red to green. So we want to see this open and run. I got to admit, personally, I like these to do that in the pre-market, to get above the worst of things and open, up here and then go. That way it's already through most of that resistance. The fact that we would be opening down here and then going, not just in AMD, but in a lot of these that we were looking at, it doesn't bode well for the day, right? Plus it's Friday. So even if they were to play Save-A-Ho today, which I don't think that it's today, right? I really think it's Monday, maybe Tuesday, a good gap down first and then a good run, that it's very likely today's going to be another sideways day. Having said that, the chips are down, just down less than the EV names and less than the China ADR names. And those EV names are cheap. They have very liquid options. So they make great day trade products for, if you're learning to day trade and you're kind of fumbling around a little bit, fumble around in these things. They're cheap. You know that if you're wrong, you're not going to destroy your account with a $30 option, right? I hope not. And the bid ask isn't that bad, 1 or 2 pennies. So if you're just market ordering in like you have no care in the world, then at least you're only giving away a penny or 2. Yeah, I mean, that's not bad. 20,000, 11,000. Of course, we are nearly in the front, right? Come out here a little bit. Oh yeah, look at that. Nice. That'll do. You can almost see the distribution curve, right? It's everywhere. I'm telling you, if you don't understand standard deviation and distribution and as a general rule, there's so much of the market that you're missing out on, not just options, but everything. Even the way Bollinger Bands work and yeah, everything. All right, Tilray is holding its own, hasn't quite turned a corner yet. We have a potential Busby, right? Big breakout bar. Now it's coming back, testing the old resistance as a new support. That's literally the definition of Busby. So it needs to hold that 255 if this is going to be a Busby. It can build a base here. It could wick down as long as it closes above, right? It needs to close above that level. If it does, we can build a base, have a TRB, and then maybe take another run at that $3, $3.10. Obviously not today, right? I don't think it's going to be today. Yeah, those Bitcoin proxies aren't looking that hot. Now, GBTC has a pretty good stick at the moment, but it needs to keep it, right? We need to get those flows. It's a good start. I think just, keeping your eye on Bitcoin futures does the job just as good. It's winking, right? You know what they say about winking? So that's it, guys. Enjoy your weekend. Be careful. Be safe. And look, I wouldn't expect the moon today, right? I just think they're going to try to hold it into the close without drastically losing the lows. And then they'll see how, how it's going to come in next week. This has been a very controlled, very systematic sell-off. There's been no fear, right? There's no angst and hand squeezing and nothing, right? Nobody's scared of this move. So, just deep breaths, take it easy, keep your eye on the prize, because I really don't see this as the next leg down and all that stuff. I keep seeing all that bearish talk out there. I don't think so. We could hit that 50. We could. The 50 week. That'd be a nice move for Monday, right? Gap down, hit that thing, and then turn and take it right back up again. Remember the old buy the dip moves pre-COVID used to be 5 to 7%, right? We'd get a good 5% pullback, maybe 7, scare all the kids, right? And everybody'd load up to be a bear, and then we'd flip it over on them, crush them, and rip it to the upside. We're only down 3.5% from the high. That's nothing, right? We could easily give it another 2% just to really convince those bears that we're going down. And everybody, enjoy your weekend. We're back to do it again next week.